Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Market-wise, let's take a look at it out here. We have the Dow Industrials. We have the Dow Industrials down 246. NASDAQ off 41. S&Ps are off 29. Gold contract up $5, trading at $1,239 an ounce. Silver up 22 cents at $17.42 an ounce. Platinum down 5 at $1,260 an ounce. Copper down 9 pennies at $3 a pound. Light sweet crude down 15 cents at $81.71 a barrel. Bonds. This is just absolutely amazing what's happening with the bond market, folks. Right now, you get the 10-year up 31 at 128.13. You talk about conviction. We'll come back to those. The bonds went to the moon, folks. They are going to go higher, too. You talk about going to the moon with conviction, with volume, with all of the above. 30-year up 1.5 at 144.05. King dollar down 700 ticks, trading out at 85.22. The euro up 117 at 127, and the yen down 94, trading out 106.10. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? It's a heck of a day out here, folks. Now, we've been talking about this February 5th benchmark for quite a while. I need to say, I didn't think we were going to get to it in 5 days. We're real close. The cash S&P is at 1845. We've hit 1820. That benchmark, the high of the benchmark, is 1798. If you go take a look at the future, you're going to see something that's even wilder. The future today got down to 1878. We bring this little baby back, and you put this up, and what you're going to see is that the high of the benchmark is 1771. And we're down into this level with volume. You take a look at the SPY. What we have with the SPY is this. The SPY today has done 295 million shares. We got an hour left. This is busting loose in a huge way. The SPY, the high of the benchmark, is 179.87. We've hit 181.92. And we're hitting that, folks, with monster volume. The week of the benchmark is 880 million. Thus far, in 3 days, we've done 742 million. So we're going to blow that away. In that context, okay, we've been talking about the XLE. The XLE was one of the first large indices that got down to the benchmark. It sliced it, it diced it. It's underneath it right now, and I expect what you're going to see. I mean, this just blew it away. The XLE is at 79.71. That benchmark, the bottom of the benchmark was 81.75. The volume was 98 million, and we've already done this week 162 million. So you can see there's not enough room to get out the door. That's in your S&P. We go to the Dow Industrials. We take a look at the Dow Industrials. And the spread in the S&P today, by the way, folks, was 65 points. The spread from high to low inside the Dow Industrials is 485 points. Right now, you're down 252. We're breaking the swing points, do it with volume, all of the above. The benchmark on the Dow Industrials, the high of that benchmark is 17,798, and we've already hit 18,855. So when we're down that 425, 450, we're approximately 25 points off it. It's going to get down there, folks. It's going to get down there probably before we even get a bounce. The reason being, well, here, let me go to the NASDAQ first, because this downdraft, folks, there's still no fear in the marketplace. It's pretty extraordinary, actually. NASDAQ Composite. Composite down 38 bucks. We are at 4189. This is all with volume, with juice behind the move. NDX 100, we take a look at the NDX 100. That has done 84 million shares today. We're at 91.92. And we bring this baby back and we take a look at it. What you have is that, let's see, 91.36. Okay, so we hit, okay, so watch how this shakes out. So the NDX has hit, if we use the 3 Qs, has hit 90.24. Well, getting back into the lower range is 91.36. We've done that on a weekly basis already. We're blowing away the week. So that's saying the NDX 100, the QQQs are going to make their way down to 86 to 83. Big numbers. Gold contract. We go take a look at gold. What we have with gold is this. GCZ gold contract got inside. Right now we're 1238. We hit 1250 out here, 3.30, and we did that with 244,000 contracts. What that is saying, folks, number one, is that's saying gold now wants to go to 13. Well, yeah, I can make the case of 1321 now. You know, still has to get back inside the 1241 and hold it. We're 1238.30. We've done monster volume out here today, 244,000 contracts inside gold. Big numbers, big numbers. Now, bonds. Let's talk about bonds. Bonds, this is just amazing. I don't think I've ever seen a bond move like this, actually, in one day. I know I haven't. So, the 10-year bond today, folks, okay, went from a price point of 127.07 to 130.17. Now, just so you can understand something, every point in the bonds is worth $1,000. In the future market, folks, on a 10-year, you only put up $1,300. So I suspect you had two different things happen here. There's no doubt, as that expanded topside, there was a huge amount of folks that had to close those positions, short bonds for quite a long period of time. And you can make the theoretical argument that what you would have is that this would be a capitulation. I'm not in that camp. The reason I'm not in that camp, folks, okay, because if you remember, we were talking about ICE yesterday. When you go through ICE, if you're going to make it through ICE, this is how you make it through ICE, that you go to highs. We went through it. Wide price spread, accelerated volume, all of the above, just blew it away. The 30-year bond up right now at 144. The 30-year bond, folks, went to 148. That's like I definitely haven't seen a 6-point bond move when you're only putting up $2,000. You got to remember something. You know, for folks that trade bonds, and trading bonds in the future market, folks, is nice, but you don't get whipped around by this many points. Bottom line, if you're on the right side of the trade, it's pretty amazing. Wrong side of the trade, which a lot of people have been, are. That's why you saw that spike. There had to be a huge amount of positions that were closed. Now, if we go over to the actual bond market, and I'm going to put this on a continuous contract, what you're going to see out here is this, is that it was the 142 area that was ICE. Once we got over that area, 143.13 was the top of ICE, okay? Bottom line, it blew it away with volume. What you're going to see is that we're going to more than likely build some cause, and you're going to get to the highs again, which is going to be pretty incredible. The 10-year out here right now is trading at 2.1. That 10-year was down at 1.9 this morning. Pretty amazing. King dollar. Let's go take a look at King dollar. What King dollar is doing. King dollar is doing an ABC structure on the way down. It has the juice. In fact, this is going to be pretty cool. It broke a B point today with volume. I love it. Okay, so watch this. You had the expansion all the way up, meaning from 79 up to 87. Expansion was too much. You know, we were speculating it's going to be an ABC down. It's an ABC down. Broke the B point today of 85.01. You did it with 112,000 contracts versus 55. And what that sets up is this. That sets up a, let's see, so price-wise, 86.87. So it's $1.70, which gives you 84.50. I like it. Okay, so A to B equals C to D is 84.50. You breakout, not necessarily a breakout, but the wide price spread was on September 4th. This thing's going to go from 83.95 to 82.92. That's the way this is set up right now. Now, I talked a little bit earlier at the beginning that we're going to go lower because there's no fear. It's amazing, folks, okay? There's only been a downtick of minus 395, okay? People are not fearful. When people are not fearful, okay, this thing is going to slice and dice them, okay? The larger picture on this S&P is a disaster. This larger picture is down there into the 1350s. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. You get the Dow Industrials right now down 296. Your Nasdaq off 50. S&Ps are off 35. And bottom line, folks, is that there is absolutely still no fear out here, which is pretty amazing. The down tick has only got to minus 1371. And what that generates is that when you get a downdraft like this, realistically, you would basically get a down tick of 15, minus 15, 70, like in a heartbeat. The trend's not even close. So what the trend indicates is that when if you were thinking of basically coming into a bottom, okay, I heard plenty of folks out there thinking that, yeah, we want to buy this bottom. If you come into a bottom, I'm talking a longer-term bottom, folks, the trend on a daily basis is going to run somewhere over 3. We're only at 1.56. And what that 1.56 means, by the way, is that people are not selling the same stocks. What happens at Lowe's is that everyone's going to sell the exact same stock, meaning that that's all that's left to sell. Walmart, looks like Walmart just basically stepped on their own foot. That's down 323 with a monster volume, 14 million shares. Now, this just happened intraday, but this is what ends up happening when you get these downdrafts. I suspect what actually happened here is that someone released this too early because there's numbers coming across all over the place. And what they did is they cut their sales growth to 2 to 3% from 3 to 5%. You know, so I suspect they're probably in a different time zone and they thought it was 4:15 instead of 3:15. Now, folks, let's go over to our man, Mr. Darryl Martin. Don't forget, every trading day here at TFNN, we do live content from 8 in the morning to 6 in the evening. All that content to get right in your cell phone, TFNN.mobi. Darryl has an outstanding show every trading day, 1 to 2 Eastern Standard Time. He specializes in the Nadex platform, and there's no better time, folks, to trade out in that platform. Darryl and I, we have a show on Fridays, 10 to 11 Eastern Standard Time, where we're out there trading it. Bottom line is that you've heard the commercial many times that your trade is your stop. Bottom line is that when you talk about volatility, as we have here, that platform is absolutely phenomenal for short-term trading. Darryl Martin, what's going on?
What's up, man?
How you doing?
These markets are insane. You got to love this volatility.
They are. There is no doubt, folks, okay, that the volatility out here is in Spain. And just something to keep your head wrapped around here for a second, folks. Our markets, okay, we're down like 2%. Right now, the Dow's down 1.8, the S&P's at 1.4, and the Nasdaq's 1.1. In Europe, folks, okay, they were down 2.8 and 3.5%. This thing's not even close, okay? You know, if you're thinking about, you should be thinking about keeping stops in rather than going in and dipping your toe in here. That's the bottom line.
Yeah, it's if you don't have something that can help you really protect your account, I mean, it's very dangerous to trade right now.
Yes, there's no doubt. I mean, unless you're a day trader, you know, then.
Oh, yeah. There you go. That's when you're like, finally, it's back.
Yeah, that's a fact. And what you do have, folks, is this, is that the velocity of these moves, you know, and the XLE alone, the XLE is saying, and this is like sick, folks, okay, but guess what? You know, the February 5th benchmark was there. That's getting there a lot quicker than I thought. I mean, you got to remember something. Right now, we're down 170 points from the high, S&P points. And, you know, it's not another stretch to get down 500 more. So, you know, it's like...
That sounds so insane, but...
It does. I was coming up in the elevator today, you know, and actually when I was going home last night, I'm saying to myself, you know what, man, every time this happens, I know, I play this over my head, and I know it sounds insane. And then, and all of a sudden, it just happens, you know? And
yeah, and I'm looking at this, and I mean, we're busting 3 deviation levels. You know,
yeah.
There's a 0.3% probability of that happening.
I can't imagine how many deviation levels the bond market busted today.
Oh, no kidding. Yeah,
you don't have enough deviation levels on it, probably, right? Yeah,
2%. I mean, that thing was just flying.
Right.
So
yeah,
but you never see moves that big on the bond market.
No, I don't believe I've ever seen a move that big in one day. I don't think I have. And I trade bonds a lot, you know, but I don't think I've ever seen. I know I haven't seen the 30-year go 6 points because I always like trading the 30-year because what happens, folks, is that, you know, you're only putting up a couple grand and, you know, you're really looking to make $300 or $400. You know what I'm saying? You know, because the 30-year used to move real slow. And the way
just so you know, there is no deviation level for the bonds today. You were right.
Yeah.
So, I mean, up at 143.31, we were at 3. So, I mean, we literally made like 6 or 7 deviations. It's just like one of those, like, black swan events that would have been a beautiful ride to be in. I wish I would have been in it.
Yeah. I can't imagine on the Nadex platform. It must have been just absolutely phenomenal. You know what I mean?
Yeah, there's premium everywhere. It brings up some interesting stuff on the Nadex platform when you're trading because you're trading options.
Yes.
And a lot of traders have not had the chance to experience this kind of implied volatility yet.
Right.
And my guys, looking at the VIX over here, and I mean, it broke the high of this year, last year, and the year before today. I mean, it's busted all the way through. We're back to 2011 levels right now.
Yeah.
On implied volatility. And traders get in there and like on a binary, or really on any option, like obviously premium goes up.
Okay.
When implied volatility, like you can say when the VIX goes up.
Sure. Right.
Okay. And so when that goes up on a binary, it's going to push all the prices towards the center. I had a trader in the day, and they were like $1 away from taking profit, and they still took profit on the trade. They had a profit by the end of the day.
Okay.
But they were so mad because they were like $1 away from taking profit. Okay.
Yeah.
And then this IV spike happens when it gets really choppy around lunchtime. You know how it flew down, flew up, and then just started like zigzagging like crazy?
Right.
And that's when the IV got really high, because then it's like, what's going to happen? And all of a sudden, even though the market was going in their direction, the price dropped from it was like at 94 or whatever, dropped down to 75.
Yeah.
Because the IV got so high.
Right.
And so it was a reminder. It's like, hey, price isn't the only thing that controls the price of an option.
Right.
The most important factor in all option trading is that Vega, or implied volatility, is the biggest impact on any kind of option that you trade. It'll have more impact than anything else.
Yeah.
And so the good news is they were right on the trade. It still went the right way. They still got their profit. But they're like, what? Because, it just dropped like $20 on them. And the market was going in the direction. And they're like, what's going on? And that brought me back to the flash crash days. We talked about this before. And I'm in there. I'm going short. I'm really happy.
Right.
But I also have some calls on hedging my position. Okay?
Yes.
And I took profit. I'm like, I can't believe I got out. I'm glad I got out because that was nuts. I'm thinking my calls are worthless. I glance over, just expecting them to be worthless, and I'm not going to do anything with them. And I'm in profit on my calls on the flash crash day. And that's because the implied volatility was so huge, it just pumped it up, and I was able to close those things out at a profit.
I remember I wasn't in this 87 crash, but I had 2 or 3 different traders on that I was interviewing, and that's what they were talking about, Darryl, is that they had the same thing. They thought they blew their brains out, but the fact of the matter is, folks, what had happened is that the implied volatility had gone up so high. Same deal. They had calls, and they grabbed them at that particular point before the crush came on. And what that is that it's the expectation, and you've got to put huge amounts of premium in them. Well, they do. The market does immediately. I mean, in a heartbeat.
Oh, yeah. It's just demand. It's like all of a sudden,
So this is good. This is pretty cool then. So I got to make sure that I tune into your show, because now that's going to change the dynamic.
It is.
Yeah, inside the trading the vehicle, because that means that here. Why don't you stay with me for a second? All right.
All right.
Oh, cool, man. This is Joe Martin, Tom O'Brien. You stay right there, folks. We're coming right back. We have the Dow Industrials right now down 222. Nasdaq off for 29. S&Ps are off 24. You got gold up 440. Silver is up 17. We're going to be right back. 17 cents, that is.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. You get the Dow down 203, Nasdaq down 19, S&Ps are off 22. And what you had out here today, folks, is a financials crack. The XLF is down 49, monster volume. You're trading out here at 21.95. That baby's going to make its way back to 19. And the expansion of volume is pretty dramatic. We're talking with our man Daryl Martin. We are talking the Nadex platform, and right now we're looking at the small caps, and we're looking at the euro dollar. If you happen to be watching Tiger TV, so tell me what we're looking at here.
All right, well, I got a couple things up for you right now, what's going on. As we're talking about, implied volatility pushes everything towards the center, okay?
Yes.
And it makes it where this is what you call premium collection season.
I know. That's why I'm so intrigued with this. I know, man.
Yeah,
I know you're a pro at this, man.
Yeah, and I mean, I teach premium collection all the time, and this is where this comes into play. If you've traded options for any amount of time, or if you do trade it for any time, you'll soon learn that you want to sell high volatility, buy low volatility type thing, right? And I mean, these things keep flying up. I can't even keep them on there fast enough. But, I mean, I've literally went up 3 strikes already on small caps. Like in the commercial break, okay, buying at 80, and the things are already up at 85, 90, 95. And, I mean, if you look at this trade right here, we're talking about 7 points in the money. And, I mean, before the commercial break, we had one at 10 points in the money. This keeps moving up.
Okay.
But we're talking about 8 points on the Russell. 8 points in the money with less than, like, 25 minutes to go.
That's so sweet.
We could buy the thing for $80.
Right.
Euro dollar, we were looking over here. We had this trade right here, which is literally like 20 ticks in the money you could have bought for $80. Okay? And that's huge. I mean, that has to go 20 ticks against you before you, like, and you could get out at, like, you know, $50. Basically, have $30 loss, $20 profit. But if it stays flat, if it moves down 20 ticks, or if it flies up, you make money, all three. So in these volatile markets, you can actually make money in 3 directions, and a lot easier because it's further away.
Yes.
And on the scanner, the way I find these, it makes it super simple. I just go in here.
Okay, cool.
And, you know, I'm going, okay, I want to do an in-the-money contract.
Yep.
Okay? And I want one for, we'll just say, cap of 85 that expires in less than an hour.
Right, because we're coming to the end of the market, which is really sweet.
Yeah.
Right.
Let's say I'm bullish. I can click buy.
Okay.
Okay?
Yeah.
And then it'll show me instantly, here are all the contracts on, say if I'm trading Russell and Euro dollar.
Yes.
Okay? And I'm like, okay, well, I can buy this one for $79. When I open it up, I can see the indicative price at $29.35. That's a $27.87. Now that's, or $27.93, $27.87. That's about 10 ticks right now. And I go, there's other ones, especially the further out we go. Let's see, we got this $80 one for 37 minutes from now. And let's see how far away that is. That's 6 points. 6 points in the money. I can buy it for $80. So, I mean, that's the Russell could go against me by 6 points, and I could still be profitable on the trade. I was looking at this, and I talk about iron condors like every day on the radio, right?
Yes.
It's one of the biggest trades I'm going into pretty much every single day. And I was looking at this, and this cracks me up. Okay, here's an iron condor where you can make $40 if you buy the lower spread. Okay?
Yeah.
And you can also make $40 if you sell the upper spread. You can make $80. That means the market will go against you by $8 by expiration today at 4:15, and you'd still be break even. Anything less than that, you're making money. An 8-point width from now till the next 30 minutes. And, I mean, I found it in 2 seconds on the scanner. I'm like, you can't find these. Okay, this is like you go into it, you look at it at night to find this kind of stuff for the next day.
Sure.
This is 30 minutes from now, or 40 minutes when I took the screenshot. 40 minutes from expiration, and I can find an $80 profit trade. And, you know, that's putting up like $250 on each side. But as far as on risk, I mean, you're talking about a 25% return, you know, in a matter of 40 minutes.
Yeah,
So, and I mean, I used to be happy to make 6% on the Russell in 30 days.
No,
I'm
with
this is 20% on the Russell in 40 minutes.
Right. And this is, you know, folks, as you're hearing this, you can come over to our website at TFNN. You can bring up the Nadex platform. They'll put $25,000 of paper money into it. Daryl's on every day at 1 o'clock. You know, you can listen to him. He'll walk you through it. This is the time, folks, that you want to really wrap your head around this and understand the volatility, how this platform works, where the openings are. Because Daryl and I have talked about it before. When you have a new platform, and this is a new platform, it is an option platform. There's no doubt about that. But what you also have, folks, is we have a platform with volatility, with a new structure, that meaning they're expiring, just as Daryl said, every couple hours. So when you get a situation like this, and you're talking about 30, 40 minutes, the reason that the implied volatility is so high, folks, because the market has gone from 164 down to 300 down in all of minutes. Okay, so that is built in there. And, you know, granted, yes, it can happen. The other side of that is that as you're trading on that, the probability of time is on your side. And what this comes down to is you want to be on the other side of these trades. That's what it comes down to, which is pretty amazing, man.
Well, and that's one of the biggest things. I saw somebody earlier today, another trader, they were all complaining. They're like, man, the premiums are so high. The break-even distance is so high.
No.
And I'm like, as soon as you say that, you should instantly say, so why don't I go the other direction?
Exactly.
Like, if you're complaining about you not liking the premiums being high, you should be going, wait a minute, why am I thinking as a premium buyer? Why don't I become a premium collector?
And watch what happens here, folks, because the majority are not going to be collectors. That's what you also have happening here, which is really cool, okay? What will happen is that folks that haven't been in the market for a while will just say, as Daryl said with whoever that trader was, the bottom line, you can be right in the direction, but if you're wrong on the implied volatility out here today, you can lose money. That's what it comes down to, which is just amazing. Or you'll break even. You'll think that, oh my God, we just made a fortune, when in fact you just broke even. It's just because you're buying something when the volatility is just way too high. That, you know, so.
Exactly. I mean, all I do is I go to the scanner, okay?
Yep.
And then what I do is I just look for what I call inverted proximity or whatever on the trades, and it makes it really easy for me. So like on a buy, I would expect the number to be positive. I look for a negative.
Sure.
Okay, on this, so that type of thing. So I just basically look for the opposite. And I talk about this on the show, so if people tune in and listen to it, they'll learn it real quick. But basically, I look for a negative number on buys and a positive number on sells under the proximity line. And that basically tells me I can buy this for, 70 ticks below the market. I can, sell this for 7 ticks or 10 ticks or 20 ticks above the market. Well, everybody wants to buy lower and sell higher, right? That's the whole idea.
Sure.
So if you can buy lower than the market and make some decent money, or if you can sell higher than the market and make some decent money, then the market doesn't even have to move and you make money.
I know. It's just a mind blower.
I mean, if it moves in your favor, you make money. If it stays flat, you make money. If it moves against you a certain amount, you can actually still make money. So 3 out of 4 scenarios, the fourth being if it moves against you far, but 3 out of 4 scenarios, you can profit.
You get action.
I like those odds.
No, big time. And the time value's with you. The time value's with you in an extraordinary way, folks. That's what it comes down to. Pretty amazing.
And here's some of these binaries I had up earlier. Now they're all the way up at 95.
Right.
That's pulling up right during the show. There's that one I had up during the show, $95 right there.
Yep.
I mean, they've already taken profit. If
and
you're in or out,
those 80s, those 80 and 78, right? Exactly.
Yeah, we were talking about, 5-10 minutes ago.
Yeah.
And now they're already at max profit. Take the profit, be out of the trade, and you're done.
It's pretty amazing, man. Look at that thing. Amazing. And its volatility, folks, is only beginning. It's, it's not stopping, that's for sure. Well, listen, man, market-wise out here, too, folks, this is quite a bounce. The NASDAQ just went positive. So the NASDAQ is up 2. The Russell's up 11. The Dow is down 144. The S&Ps are only down 13.
You notice how I buy on small caps? I got sell on Russell over here.
Yeah. No, it's pretty amazing.
I mean, but looking at these and, looking at these contracts, tomorrow, just for your listeners out there, we got Google earnings coming out.
Oh, sweet.
And every quarter, you know what I do? I go into how I traded on U.S. Tech 100.
Yes.
Which is the NASDAQ 100 on Nadex.
Right.
And I go and how do I trade the actual earnings release? And it's I may actually get in during the show, or I may explain how to get in later if the setup's not there.
Yeah.
But I'll be going over in detail how to trade the Google earnings release using the NASDAQ 100 or the Nadex U.S. Tech 100 binary contracts.
And folks, Darryl shows on 1 to 2 Eastern Standard Time, no matter where you're listening right now. Bottom line, remember, on your cell phone, on your tablet, on your computer, TFNN.mobi will get you the audio. TFNN.com will get you the TV plus the audio. You'll see the Tiger TV right on the right-hand side. Just hit that. You'll get both with the charts and all of the above. Darryl, man, thank you so much. You have a great one, safe one, and we, no doubt, look forward to the show because what's so cool about this, Darryl, is that the dynamic changes quickly, and nothing is easy in the marketplace. We know that. But the reality is that collecting premium is a nice deal because you don't have as much competition,
Exactly. Yeah. And, I mean, if you learn that play, I talk about when you go out to the golf course, you don't just bring a putter.
Right.
You have several. You got drivers, you got your irons, and you got your putters, right? You got sand wedges and everything else. This is sort of that sand wedge thing. You don't always get this high a premium.
Right.
But, if you have the sand wedge and other players don't, you got the edge in the game.
There's no doubt. There's no doubt, man.
So you got to pull this one out of your bag and learn how to start using it.
Yeah, no doubt. Well, listen, man, you have a great night, safe night. I'm sure you will. And we look forward to the show tomorrow, man.
All right, man. See you then.
Okay. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. Dow Industrials right now down 146. NASDAQ is flat. S&Ps are up 14. You got gold up 640. We're going to be right back, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. We get the Dow off 187, Nasdaq on 14, S&Ps are off 19. You had Walmart come out early with some numbers, folks. Walmart's down $3.50 with just monster volume, 18 million shares. Apple blew it also. Apple, they're supposed to have a big announcement tomorrow about their iPad, and guess what? They put it on their website about an hour ago. So Tim Cook is going to have some egg in his face. Now, folks, let's go over to our man, Mr. John Logan. John starts us off every trading day right here at TFNN, 8 o'clock in the morning, 8 to 9. Outstanding show. John Logan, what's going on?
Hey, Tom. Good to be back with you today.
And you also, man, look at this. You're a trooper, man. So let's see. It's, what is it? Is it 3:30 in the morning now?
It's 3:51.
3:51, man. You're an animal. You are an animal, man. I'm telling you.
I got a little bit of a nap in, though. You know, when I take a nap, though, in the markets like this, it's like, it's almost you roll the dice when you wake back up. You're like, what the? Yeah. What's going on next?
Yeah.
This is crazy. This is crazy. You know, the 30-year was up 6 handles approximately from the lows today to the highs?
I know I've never seen it since I've traded in the last 25 years. I know I never seen that because, you know, by the way, folks, what that happens, you put up all of like $2,100 to trade the 30-year. So it's like, okay, you know, the reward versus the risk is incredible. And if it looks to me like, you know, there's no doubt they caught everyone on the wrong side. You know, but now you have a higher high with volume. So it's like, yeah, you know, it's going to be like, okay, where the rest of these buyers going to come in from, which you can make that argument too. Do you know what I mean? That a lot of shots were closed out.
I got to tell you, that's the way that thing's acting now. It's, you know, you and I have been kind of long treasuries forever here, but that's almost blow-off kind of looking, you know, the way it's kind of almost...
No, that could be capitulation. There's no doubt. There's no doubt. You know, you know, it's there. I expect that, you know, what you're going to see, though, is that we're going to see it higher.
Yeah,
I know that's sick. Believe me, I know that's sick. Okay,
I'm with you. I promise you I'm with you. But, you know, that kind of action... That might be a little bit of a temporary kind of top because that is. Yeah. I mean, we've seen this. You know, we've seen this movie before when something like that happens.
And there's no doubt. And you know, if you take a look, you know, if we just use the TLT as a barometer, what's happening? So the highs in the TLT was July of 2012 was 132. Well, we hit 127 today, and we did that with 36 million, folks. Now, when you do that, when I look at it, when you do that, it means you already have more volume. It's like, okay, man, then, you know, you have the shot of at least testing it. You know, that's on the longer term. The shorter term, I suspect we do have some kind of a blow-off here, which is going to get intriguing because if that is the case, then it's like, okay, then you actually can get a bounce going, you know, because if the bonds want to pull back, folks, that's saying that the market will get a little room to breathe, you know, so.
Yeah, I mean, you know, 2008, I saw the 30-year go up 8 handles one day, and that was breathtaking.
Did you?
I mean,
okay.
It was yeah. I mean, that was that was a one-day thing. I think it was like November, somewhere 8th or 10th or 12th or somewhere in there in 2008. It was just mind-blowing when that happened. But you know, when they've got their, you know, foot on the gas pedal forever as far as, you know, on the bid on these treasuries, and then, you know, the market kind of takes care of that for them lately to kind of push that up even farther as that natural hedge, historically speaking, for it to go up. You know, when that kind of move happens like today, you got to pay attention to it when it kind of comes off that hard too, because in 2008 it didn't even come off. I mean, it went up 8 handles. There was a cataclysmic event going on with all the credit problems. Right. We don't really have that at this moment right now. I mean, there's not. No, I mean,
we don't. Right.
You know, the world was coming to an end in 2008. And,
right.
You know, right now, you know, I think it's
the people that are long, the world's just coming to an end to.
Yeah,
it's just one part of the marketplace. You know what's interesting out here today, John, is that there's still really no fear. You know, I mean, which is pretty amazing.
I don't know how many people have told me today that they're just happy that we're having a healthy pullback.
Oh, that's weird. That's weird, man.
That goes in line exactly with what you're saying, because it's there's the fear is not it's not a concrete fear. It's almost like
yes.
Let's look at this as a healthy pullback right now. But yeah.
No, and that's always, you got to be careful what you ask for, right? I mean, that's what that comes down to, folks. Okay, so.
Yeah, we talked about 1955, 58 this morning, and
yes,
we always, and Eddie actually, Eddie was on from Moscow. I don't know if you mentioned your plug on that yet. But.
Oh, it was. Hey, folks, you had to hear this. This was so cool. I'm at home. I just finished working out with Nico. I'm walking in the house, and Tiger TV is always on in the house, and I got a monster TV, so it's hilarious because I can see it in the backyard. So I'm walking in, and all of a sudden, I hear John speaking, and he has a guest, and I know the guest is from Moscow, and the guest is saying, well, TFNN is censored. You can't get it in Russia. And I'm saying to myself, what is he talking about, man? And that's when I heard you say, what are you talking about? So it was like, you got to be kidding me, man. And, and then he mentioned something, well, he said, that doesn't even happen in China. I'm saying to myself, man, what is, it's intriguing, I guess, Yeah.
Well, we were talking about 1958, 55, that general neighborhood, and as we don't talk a lot about targets, we just try to let the profiles regulate the way up or down. And,
yes.
And that's just it's great to have targets. But we did say, there's a massive inflection point from the past, and we got to pay attention to this, and we've been down a long ways, and blah blah blah. But the thing is when you pick out areas like that are very important. And then they are important as support, and they are also important as resistance. All right, if the support doesn't hold, so-called support or target. So what happened is good Lord, I mean, we came down. We went to like 1830, then we rallied back up to that inflection point around 58. I think we hit 60. Then what do? In the same day today, we went down to, what was it, 18 or something? What was the low today?
The low.
18.
18, right.
Yeah, so we came back, we picked that target pick, came back up, used former support resistance, whatever, came back down, and we sold off 40 S&Ps from, where it came back
Isn't
up.
That sick? I know.
And now we're back up what? We're right back up 40 S&Ps, so we had my God, what is that?
We actually went to 1813. How's that?
Yes, I mean,
yeah.
This is nutso volatility. So right now, we're obviously climbing back. I mean, I think you'll probably agree with this too. We're due some kind of.
Oh yeah, we are. And folks, this is just the beginning. So the bottom line, cover yourself. That's what it comes down to, man. Amazing. Listen, folks, don't forget, every trading day, 8 o'clock tomorrow morning, you can get John live. He's come all the way in from Asia just for you each and every trading day. John, get some sleep, man. Look forward to the show tomorrow.
We'll do.
Thanks, man. Stay right there, folks. Come right back. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote is by Rod Dahl. Those who don't believe in magic will never find it. Market-wise, let's take a look at it out here. We had the Dow Industrials down 173, NASDAQ off 11, S&P's off 22, all folks with monster volume. We did $1.1 billion in the NYSE. We did $3 billion in the NASDAQ. Nasty, nasty, nasty. Gold contract up $5.90, traded at $1,240 an ounce. Gold went topside, wide price spread, accelerated volume. Got up to the 1250 area, didn't hold price. That'll be right back up there. Got back inside the 1242 area, which is the higher range. Silver, 1744. Silver needs still more action. Copper down 8 pennies at $3 a pound. Light sweet crude down 17 cents at 81.67. Crude still wants to run down to that $77 area. Bonds. The bond market, folks, would just exploded topside in an incredible way. What you had is this. So if we look at bonds, we bring bonds up. This is what you had with the first off with the 10-year. 10. Oh, I see him on the wrong screen. Let's get over there. TYZ4. So, 10-year out here today did 3.9 million contracts. And as one of our bonds traders said in the den, he had never seen that many contracts. I definitely never seen that many contracts. We got to a price point out here of 130.17. So what I suspect you have here, you have two different things. Number one, you get the wide price spread accelerated volume. You have a high volume high, you're going to be back up there. I suspect it's going to take a break for a bit and go sideways and build some cause. The reason being is that this extraordinary move more than likely had to do with the amount of folks that had to close a position because they were short. You got to remember something. In the bond market, folks, every point is $1,000. When we're talking about the 10-year, you put up all of $1,600. I think it's only $1,100 actually. Yes, $1,300. You put $1,300 up to carry $100,000. Okay. Bottom line is you can see why the blowout, is out here. 30-year bond. Okay, so we take a look at the 30-year. What you have with the 30-year? 30-year is at 143.17. The 30-year went to 148, and we did 1.1 million contracts. Now, what the 30-year has done, well, the 10-year and the 30-year, they broke through ice with about as much conviction as that you're ever going to see anything break through ice. We had approached ice. Depending on how long you've been listening, bottom line is that ice was set up at 142. When you come up to those areas, you break through them with conviction, you're going a lot higher. So the way we're set up right now, actually the way we're set up, look at this. Oh, interesting, man. Hold on. We can do this right now. It's a monster ABC up. So 127.23 is A. 141.30. So I call that 142 because 141.32. So 142 and 128. I'll let it do it like that. So 28.38. That's 14 bucks. 36, 46, 50. That's it. A to B equals C to D is the 150 mark. We hit 148. This is in the highs of the bond, the 30-year 152. So we're going to go after that 152. That's the bottom line. So rates. If you want to get those mortgages, folks, go out there and get them. The 10-year actually is at 2.1 right now. The 10-year was as low as 1.9 this morning. Bottom line, though, this is the time to get them. King Dollar. What do we have at King Dollar? What King Dollar did is this. King Dollar backs down. King Dollar's doing an ABC structure on the way down. Took out the B point. Took it out with volume. After a huge expansion topside, King Dollar's at 85.05. King Dollar's going to be running down to 82.97. Gold. Let's go back over to the gold contract again because what you're going to see is this, is that the gold contract had a price spread today, the low of 12.22, a high of 12.50. We did 249,000 contracts. That sets gold up, folks, to get into the level of 12.97 to 13.12. Big numbers we're talking. Netflix, and if you want to see, this is what happens in down markets. This is sad but true. Netflix, you just come out with numbers, folks. Netflix is down $104. Netflix closed at $448. It's trading at $344 right now. And if you want to see a destruction in price, this is pretty incredible. And let me just bring up inside the context of the largest owners of Netflix, and this is pretty incredible. So you get Capital Group. That'd be an ETF that would get that. There's going to be a lot. There's good old Kyle Icon. So Kyle Icon, if you can do this. Check this out though. This is interesting. So we'll see how much more actually Kyle actually sold. On June 30th, he had sold 479,000 shares. He had owned 1.7 million. As of that file. It doesn't mean he's not out, though. Bottom line is that you get some price destruction in a credible way. Actually, now it's down $110. So let's see what they're saying. Well, actually, let's go see what's at $339 first. This is amazing, man. So we take a look at Netflix. You put this on a 3-year, and, well, this is about as clean as you get. This is pretty sick. Okay, so last time with price and volume. Guess where it was, folks? $317. That's where we're going. Except we're going there on one day. This is clean as you can get. You know, you look at any chart of Netflix, guess what? That was the last time it had gone over that level, dramatically lighter volume, and that is from October of 2013. And when you see things like that, folks, that's when they just never let you out. You know, that's what it comes down to. In fact, I can make the case that Netflix is going down to $238. That's the first place that has any support, $238. And what you will get now is this. With Netflix being down $100 in one day, you're going to get margin calls that are just going to be absolutely incredible. The short position was 10.38%. You know, so bottom line is that that's a big short position, but it certainly won't. That's only one of every 10 shares. So numbers on Netflix go like this. The estimate was 91 cents. They made 96. So they made their numbers. Something's in here. I believe a technology expert at TFNN, he was saying that inside the Netflix of moving south is their content cost. You know, bottom line, big price destruction. Walmart, what do you have at Walmart? You know what's so crazy too, folks? Okay, in down markets like this, there's mistakes that are always made all over the place, and it's like, how does this happen? You know, one mistake after the next mistake, meaning it just drives markets even further down. And Walmart had a beauty today. What happened with Walmart? Walmart came out with their numbers at 3:15. More than likely, it didn't say it was a mistake, but more than likely they thought it was 4:04. As they come out, Walmart went south with vicious volume, okay? Walmart had been trading at 3 o'clock. At 3 o'clock, it was at 76.19. At 3:10, it was at 74.67, and it came down with 3.5 million shares on a 10-minute bar. Walmart ended up down 21 million shares, and what Walmart was saying is that they felt their sales growth was only going to be 2 to 3% versus 3 to 5%. Apple was another one. Tim Cook is going to have egg on his face in an extraordinary way. Apple was set up for tomorrow to unveil their new iPad. And the bottom line is that someone at Apple, you know, one of their employees, bottom line, put the new iPad out on their own Apple site. And, of course, you know, if you're involved with any type of Apple product, particularly in a launch, you know, there's plenty of people that just absolutely love Apple, and they were out there, and, you know, they get pictures of it, and the pictures are on the net right now. So now what you have is that there's no surprise. eBay just come out with numbers. eBay closed at $50.24. That's trading at $49 right now. And, oh, look at this. They're cutting the forecast, too. So this is going to get smoked more than this. The estimate was 67 cents. They made 68, but they're also going to cut the year forecast. So right now, 50.24, let's see. There she goes. Yeah, 48.53. So just between that 30-second blip that I just did there, that just went down another point. That'll be down more. That'll be down particularly more because of the Netflix. Netflix is good. Not that it doesn't go across boundaries, but Netflix will hit everything. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials finished down 173. NASDAQ off 11.5. S&P's off 28. Monster volume, folks. 1.2 billion on the NYSE. 3 billion on the NASDAQ. As you come over to TFNN, folks, right under breaking news, you'll see the first mortgage program. What that is, that's the Tiger Real Estate first mortgage program. If you have your money in the CD market, if you have cash that you're looking for a conservative investment for 4 years that you do not need your cash back, you can check out that first mortgage program. As you hit that under breaking news, that will bring you to a video that I did. Inside that video, it explains exactly what we're doing. The way the mortgages work is that we are looking for 70% of the value of the real estate. Let's say real estate's $100,000. Let's say $100,000. It would be, say, 70, just to cut to the chase. You have a $30,000 kicker in case real estate does go down. That's the appraised value. Third party appraised the value. We're paying 5% on an annualized basis. That is paid monthly. You can check it out on the front page of TFNN. And as you do that, you can hit the Tiger Real Estate Opportunity Fund, the banner. And inside that, at that banner, what you'll see, that'll bring you over to the Tiger Real Estate Opportunity site. You'll see what the first mortgage program is all about. You are basically, we're cutting out the middlemen. You're actually the bank. That's what this comes down to. So if you are in the CD market, or you have cash that you want a more conservative investment in that's totally secured, this is not a pooled investment. You have the first mortgage on the property. The fund pays all the expenses, including title search, lien search, recording fees, tax stamps, all of the above. You can check it out right on the front page of TFNN. Then you can also check out the first mortgage portfolio. We do have more properties than that's up on that portfolio right now, because right now there's 8 or 9 of them that are claimed. There's about 4 of them that are up there, and we have about 3 more that we're going to put up there. After the closeout here, Netflix's NFLX is the big number, and this is NFLX. This is This is pretty amazing, actually. Netflix right now is down $35, $45, $113. If we take a look at that, so let me just see where we're at. We're okay, with 335. 317 was the last time it had any volume. And, you know, we talk about this many times, and, you know, it blows my mind when it happens over and over again. It's just the way it goes. It's just, you know, markets come back to the last time with this volume, folks. And, you know, when they come back like this, it is terrible for people that are in the stock. There's no doubt about it, because what has just happened in the matter of 2 minutes. Now this part is really unusual, because the fact of the matter is the market's closed. They come out with numbers. The numbers weren't bad, but inside the numbers, they're talking about content. They're talking about the amount of bread that, you know, it's going to take in order to sustain that content. And what happens is that the stock is down 25% in literally a heartbeat. Now, when you come down, and you come down with volume into a high volume spike, what happens? Well, what happens, folks, is that you blow it away. And that's why we're always looking that first we look for high volume spikes. Then we're looking that, you know, if it's a bullish type of market, you wait for it to pull back, and you wait to pull back to see what it does at that level. Now, in that context, with Netflix, we'll see what this happens tomorrow. But if you come back with 45 million shares and over, today we only did 6, that would set up Netflix going down to 172. And if you think that's bizarre, okay, you got to remember something. That's how Netflix likes to trade. You know, Netflix traded from a price point, if you want to see something that's incredible, you know, we bring this back, and what Netflix had done, you know, Netflix in 2011 was 304 and ran down to $56. Okay, that's just how Netflix likes to trade. So it's a big number. Let's go to Terry in Orlando. Hey, Terry, what's going on?
Hey, Tom, how you been?
I'm doing great. You having a good day out there?
Yeah, you know.
Cool, man.
Always be better. But, hey, quick question on the SQQs and the Triple X, you know, the pro shares and things like that.
Yeah.
And just, I know you talked about them before and getting in and getting out and good timing. But I got something and just trying to figure it out. Even from, you take the QQQ from 10.8 to 10.15, it went down $8. You take the SQQ in the same time frame, went from 36 to 46, $10. It's a 3X. So why are, you know, I expect at least like to get $15 out of the thing.
Okay, so when we're talking about the leverage product, folks, okay, what I'd love you to do is come over to our website at TFNN, go into ETFs, and pull those white papers. Because what happens, Terry, is that each and every day they reset. And so the reset on this, and this is what would get you in the reset, why you didn't get 15 versus the 10. The reset, when on October 10th, we were down at 95, then you went back up to 98, then you went back down to 96, and then you went back up to 98. If you get a sideways move, which we did those 5 days,
yeah,
both the bullish and the bearish leverage product will come down. They mathematically have to come down. So picture this, folks. If it's a full trend, meaning that every day either going lower or higher, you'll actually get more than 100% or 200% of the product, even 300%. You go sideways like that, and what ends up happening, they both lose value, because picture something. When you go down 10%, right?
Yep.
Well, if you go back up 10%, you're not up, you're not even, because you're going up 10%, folks, on a lower number. It's just like the market itself. You know, it blows my mind how
Yeah, you lose 50, you got to make 100 to get back where you were.
That's it right there. That quote right there, folks. What Terry said right there, that is the number that you got to wrap your head around. If you lose 50% on a 50% pullback in the market, you have to go up 100%. So that's what's going on with those babies, you know.
And that happens even on that where it's not based on the close, because on the close the last 8 days, I mean, they still went lower from the 8th through the...
So watch this. No, it's the thing you have to wrap your head around is that they reset themselves every single day. Yeah. It's a new market every day. If you read those papers, you'll really learn a lot about it. And what you'll get is this. Now, when we posted those papers up, number one, I went over them 3 or 4 times. Because what happens, folks, the first time you go over them, and I trade these things all the time, and the first times I'll go over them and say, okay, man, hold up, you know. And then what you'll get out of them is this. You'll get the math out of them. But what you'll also get out of them, which is really cool, is that what I've found is this. When you can find these, okay, at lower prices, right, what happens is that you want to be all over them, because what ends up happening is that because you're dealing with a lower number, right?
Right.
The expansion in price, if you're right on the call, the first couple days it'll be forgiven for you, meaning that, you know, if you're wrong on the trade, it doesn't go down as much, right?
Right,
and then if you're right on the trade, folks, they expand very quickly. So, you know, it's something that you want to wrap your head around.
Yeah, all right, I'll check that the way.
Thanks so much, man. You have a great one. Have a safe one. You stay right there, folks. We're going to be coming right back. Netflix is the number out here, NFLX. Down over 100 points, folks. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call daily trading newsletter by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email TigerFund at TFNN.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the TFNN.com homepage or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Netflix. Netflix is the big problem out here. Netflix closed at $4.48. It's trading down $121. It's at $3.27. And bottom line, folks, 317 is the number. This little baby, hard to believe, but it's going to go to 317 in, you know, all of, let's see, what time is it? It's 4:35. They come out with the numbers at 4 o'clock. It goes back to the last time that it had any volume. And if you want to see how this works, folks, bottom line, pull up Netflix when you do get home, and you'll see the spike that I'm talking about. Now, what you're also going to get, I suspect we're going to get out here is this. This thing's going to come down way too much volume. So Netflix is going to get destroyed. Netflix, well, it's already destroyed, but Netflix will come down to 172. So you're talking just monster volume on the way down. American Express, AXP, they just come out with numbers. American Express, they top in the analyst estimates. Still, it's not helping the stock. It's only down $1. American Express, the biggest U.S. credit card issuer by purchase, said third-quarter profit rose 8.1%, beating the estimates as customers increased spending. Net income climbed $1.48 billion, or $1.40 a share, from $1.375. Now, American Express closed at $80.93. Right now, American Express is at $80.03. The XLF, okay, this is important to wrap your head around. The XLF, folks, broke apart today. And the XLF, it got to a price point of $21.55. It closed at $22.04. It had volume of 108 million shares. The 108 million shares coming into that swing low of $21.55, 51 rather, that had 43 million shares. So now what that sets up is, put this back, we'll put this on a monthly basis. What you have is this. Netflix, the XLF is set up now to come back to 1651. This was the first break in the XLF, and I'm talking about the first break. We've been going sideways for 9 months. Now what you have a break on volume. that basically sets up a 14 XLF. And if you remember, what it does take for markets to go south and to go south in an extraordinary way is for those financials to break apart. The XLE, that was one of the leaders after the IWM, small caps. What you had out here today is that the XLE is at 80.56, already reached the benchmark. The benchmark that it was going after is 81.77. We got down to $77. Now, what you're going to have here, you're going to have a bounce. The XLE looks like it wants to bounce a bit because you're going to remember something. The XLE had come from 101 to 77 nonstop. That's, what, 23% down? You get a bounce. As soon as you get that bounce, if it's on lighter volume, what does it set up? It sets up a much larger leg down to 61. And at 61, you'll have the XLE back 40%. If we go look at the largest weighting structure inside the XLE, it's ExxonMobil. ExxonMobil went from a price point of $105 down to, 86. ExxonMobil, we put this back, we take a look at how this baby is set up, and what you have is that Exxon got back inside the low range of 94. You're down with some juice. You know, Exxon should get some support at about 81. You know, the bottom line with Exxon, if you're looking for something that is a longer-term trade, investment more than trade, at 81 you want to look at it because Exxon's paying a 3.6% dividend at 91. So at 80, that'll go up to a 3.5 or something. You know, it comes back into 80 with light volume, then you get some action. Where I'm going with that, by the way, folks, is this. That price structure, if Exxon comes into that price structure and it does have lighter volume, which is going to be pretty cool. Okay, so yeah, I'll play both sides, the bull and the bear. What you have is this. The highs of the lows of October of 08, of the low, was $81. Now, it got down to 56, but we did that with 1.3 billion shares. Okay, so that area there on the way down should be a nice plateau. That's the first part. Now, let's go to the next part. The next part is that when we had the downdraft in August of 2011, that high also is 81. So if you're a long-term investor, you want to get in that oil market, that's a place that you want to basically look at. But make sure that as you get down, there's a rejection of price. It's absolutely crucial. If you go into that 81 by $4, don't even think about it, because then what it would set up is it will set up a 67 to 56 ExxonMobil. So they're big numbers that we're talking about right across the board here, everywhere, folks. Walmart, this is going to get interesting with Walmart, and we'll hit all the retailers tomorrow because what you did have with Walmart, Walmart came out early. They probably thought it was 410. It was 310 when they came out with it. It smoked the stock, down with 21 million shares, down $2.78, came down with volume. Walmart, now, it couldn't bust higher. It's going to see if it can bust the swing lows that it's had out here. You know, we'll see whether it actually does. The 71.51, that's what it wants to go after. You know, on the daily, the volume was high. Right now, on a monthly, you really can't tell. That's how this is set up. Some of the airlines out here, Boeing got taken apart today. Boeing was down to 116. It was down $6. Ended up being only down 210. Don't touch this. What it did, it took out its swing point, and it took it out with volume. Boeing was going to be right back down into lower numbers. What Boeing has done, folks, is this. Boeing is back to November of 2013. You break that level, Boeing looks to me like we're going to go to 108, and it's possible that you can get down to $77. I expect what you see, what you did have happen there is that, unfortunately, we get the second nurse that is does have the Ebola virus, and what happened is that she was actually on a Frontier plane. She was from Dallas, ended up going to Cleveland. And that's, of course, everyone's biggest fear in the context that what do you do? People that have it get on a plane, and, you know, and there's no doubt. One of the targets says, yes, she flew after knowing that the other nurse had it, and that's absolutely crazy. And, in fact, they're saying that she actually did have a slight fever. So that is basically irresponsible in a huge way. Now, let's look at some of these miners, because this is where there's This is like this is sneaky, folks. The miners are being sneaky right now, but it's sneaky in a great way. So if we start out with GOLD, okay, so watch this. And the reason I'm saying this is that miners couldn't hold big price out here, but watch this. So Rango Resources, GOLD, got to a price point today of 70.59. Monster expansion of volume. When you come in, if you have my book, The Art of Time in the Trade, Your Ultimate Trading Mastery System, you know that when you come into swing points and you have an expansion of volume, before you come into the swing, you are going to blow that swing point away. GOLD today, your swing point is 70.91. Your volume characteristic is anywhere from let's take the biggest one, 1.6 million. We're coming into that with 1.48 million. That's what you love to see, folks. Why? That's going to blow that away. It's going to get back inside the 72.14 area. That's how that is set up. We're going to take a look at Gold Corp and see what Gold Corp did. GG. Gold Corp out here today does same deal. So check this out. Gold Corp went to a high today of 24.48. Yet couldn't hold that price and closed down 7 pennies. Expansion of volume, 9.3 million. 9.3 million is going into 9.4 million. You're going to see Gold Corp right up there. You're going to see it basically get into much higher prices. Anico Eagle, AEM. What do you have with AEM? Here she is. So AEM, oh, this is really pretty. So AEM got to 33.25. Closed at 30.83, monster expansion of volume, 4.4 million shares. 4 million was into 5 million, took out the swing of 3.9, and was going into 4.3. So these were running in with volume. Okay, so one of the targets wants to look at the GDX. Now, the GDX, folks, is the gold miners vector ETF. Inside this ETF, what you have is this. You have Gold Corp is 14% of it. Barrick is 11. Barrick's a dog. Newmont is inside at 8.3. That's a dog. Humana is having a tough time. That's only 3.8. Eldorado looks good. Anglo Eagle looks good. Anico Eagle, Newcrest Mining, I got to look at that. Rango looks good. Silver, oh, I want to look at SLW because SLW, I was bringing this up yesterday. Yeah, see, this is good. So for you folks in the silver market, this SLW is a nice setup. This is what's happened. SLW today, now this is the largest silver broker in the country, in the world, right? SLW today had 9.2 million shares. You're going into 9.9, so you're pushing in with volume. Got to a price point of 20.63 and didn't hold price. 2007 is the number. That has to get back inside. If you do want to test drive the gold report, folks, great time to do it. You can test drive it 30 days, absolutely free. Come over to our website at TFNN. Go into newsletters, go into investment newsletters. You can test drive the gold report. Dow Industrials closed down 173. NASDAQ off 11. S&Ps, they continue to get smoked, folks. Down 31 right now. We're going to be right back.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow Industrials finished down 173, NASDAQ off 11, S&P's off 30. I got to show you something, folks, because this is a great time to get educated in the marketplace, and to get educated in the marketplace as to the aspect of, in this particular case, I'm talking about Bloomberg, and I'm talking about, you got to picture something. Bloomberg, number one, I suspect Bloomberg himself is coming back into the Bloomberg system. I've had a Bloomberg for 19 years. But I can tell you something. One of the main reasons is that, you just get used to something. And I've seen this happen before, but this is crucial to understand about reading news, what's actually happening in the marketplace, and the aspect that these financial outlets always just want to be bullish, okay? And in this case right here, this is almost just saying, you know what, why do I even need this thing? So I want to show you something. The way that the structure works, okay, so they have, you know, great information. But the way the structure works, you're looking at the top business news in the whole world, okay? And it's market structure. Well, guess what? You have Netflix that's down $115, and that is not on the radar. What's on the radar, so check this out, it's just amazing. You know, the S&P, it's saying it pairs the biggest loss since 2001. It has eBay holiday sales misforecast, okay? The bottom line is, inside this structure, it's important to understand, and that's why you better do your own work, okay? Because I'm sure there's going to be plenty of folks that whether this is on your cell phone or anything else, you know, you're looking for the top news. Folks, Netflix NFLX being down $120 should be on the top of that news, okay? And I'm not saying that in the context of being a bear. I'm saying that in the context that I've used this type of information many times to realize that, oh my God, this whole thing is a fixed deal. And it is. That's the bottom line. You have to understand that the way that Wall Street operates is that they operate on a continual basis to accumulate dollars. That's the operation. That has to be the operation, because as they accumulate dollars, they get a piece of every dollar that's coming in. And in fact, if the market goes up, the piece of the amount of dollars gets bigger because the percentage stays the same. And, you know, it's NF. It's just an NFF. It's pretty incredible. And, you know, inside that context, so you get Netflix down $114. And yet that is still not running on the top of... Oh, here it is. Oh, we finally got... Oh, so watch what they did. Here we go. They just got it up. Martha Stewart Living jump says Netflix, eBay drop in after-hours trading. So let's see what they say. Oh, this is even better. So check this out. So it's a one deal. Equity move is late in trading with Martha Stewart is up 26% on 11,000 magazines produced by Merrill. Netflix down 26%. Declines after earnings. So it's a one... You get the gist of it. It's important. It's important to understand right across the deal. Some of the high-volume stocks today, and it did have a high-volume market on the way down. And what you should also get out of this, folks, is that when the rats are jumping off the ship, guess what? The doors are never big enough. Bank of America was down 76. Apple was off 121. Apple, if we go to Apple for a second, Apple started breaking today. It took a bit. There's no doubt about it. But it did get down. It tested that 96 area. That was the high-volume spike. So 96.14. That was from the 9th. We hit 95.18. We did that with 99 million shares versus 189. But that crack is important. Why is the crack important, folks? Apple wants to run down to 85 bucks. I suspect they actually want us to fill that gap at the $74. A stock out here today, Shire. I gotta need some help from the Denon here. What was the symbol in Shire? This stock was down 33% earlier, and what it had done is that it went right to the gap. So this was a gap up situation. Thank you very much. Thanks, Z. SHPG. So check this out, folks. This is sick. This stock was down $74 at 170.49. This is one of Paulson's biggest owners. This is a headache. But watch what it did. This is amazing what it did. So the stock was trading sideways. You know, it gapped up on a takeover. That was on June 19th. It had a gap that was wide open at 189. Yesterday it was trading 242. It opened today at 189 and closed at 170. It went as low as 156. And when you put this, like, this is a disaster. I mean, you know, when you're talking about a hit, this is just absolutely incredible. If you want to see PHDC, how, you know, Paulson's fund's going to take a monster hit out here today. So Paulson owns 3.3 million shares. So pitcher 3.3 million times 74. That's a big hit. Fidelity, that's spread across at 3.4. Inside Netflix, NFLX, what you are going to see out here today is Carl Icahn's going to take a big hit on this baby. Well, actually, that's if he still owns it. At the last filing, he owned 1.7 million shares. But that filing, by the way, okay, was as of June 30th, so he very well could have sold everything out. You know, who knows whether he did or not. If he didn't, he's in, you know, well, Carl Icahn wouldn't be in trouble because he has plenty of billions that he could blow his brains out at. But that one position certainly would be a hit in an extraordinary way. Some of the other high-volume stocks out here today, J.P. Morgan, 246. That was down. Inside the Dow Industrials, what you had Big Blue was down $2. Disney was down $2. If we go over to Disney for a second, let's go look at Disney, because what you are going to see, yeah, she's down with volume. Places, folks, that have large amounts of people are going to have problems. You know, why? Because the last thing that I suspect any of us want to do is get in the middle of a large amount of people with Ebola basically running around. The second person that had got the virus from in Dallas had already gotten on a plane, went to Cleveland, came back. So what you have with Disney, Disney's at 82. You know, and this is going to be really about the parks. It's certainly not about ESPN, because ESPN is fast, furious, all of the above. You know, we'll see how it hits the bottom of 68. 76. 76, the first number. 76 is not a bad setup also. Man, that 2 hours goes quick. Folks, when we talk about health, you stay right here. Allie Ford's going to be coming up next with Mindful Living. Awesome show coming up for you. Always remember, whatever you think about, you bring about. Whatever you focus on grows. Whatever you want in life, folks, visualize like a nice big motion picture. Step into it. Take ownership of it. Fly with it. You stay right there, folks. Allie's coming right up.